Yeah, welcome everybody. So we're about to start the training. You are welcome to our tax practice academy for Obi Nambadabuchi and Co. And in this training, in our tax practice academy, today we'll be looking at uh, filing of tax return and looking at the penalty, the current penalty regime, in the Finance Act. So basically, we have done different part of the training from evolution of taxes. We've also done tax computation, personal income tax computation, company income tax computation. Done deep withholding tax and value-added tax, and today we'll be looking at filing of tax return. And in this filing of tax return, we'll be looking at the current penalty regime in the Finance Act. My name once again is Obiama Abuchi. I'm a chartered accountant and a tax consultant. Okay, basically, today what we'll be looking at quickly is to lay emphasis on in the Finance Act. We have some benefits given to taxpayers, and again, we don't want taxpayer or consultants to lose the fact that anytime there's a tax planning or there's a Finance Act, the Finance Act is mainly it's just like a tax planning tool for government. As I said in one of my classes, that imagine that the budget of the country has increased to about 13, more than 13 trillion. Okay, and definitely the Finance Act is there to ensure there's additional revenue generated to finance the budget. So it could be that small entity might have been given some uh, palliatives in terms of benefits, but some of these penalties or additional tax might come from medium and large scale entity. And if small entities are not careful enough, they might be paying through not taxes now, they'll be paying through penalty. Imagine the effective date of the VAT when it comes to the Finance Act 2019 from 1st of February, and now we're in 1st of February 2020, and now we're in 2021, meaning that some of the penalty regime in the Finance Act will commence this year. And again, it's very important for us to be able to understand this so that we can advise our clients. And if you're an entrepreneur and you are doing business of 25 million and above, then you are able to know that this is your exposure. This is your exposure as a business owner. And if you're a tax consultant, you will be able to tell that you can compute the exposure of your client and advise them better. That although there are benefits in terms of filing obligation, and I mean not non-filing obligation for SMEs in terms of small, medium entity. There are some benefits they are going to enjoy in terms of they are not required to file VAT, they are not required to charge VAT, but if they are not careful enough, they might run into this trap. So there's need for continually or continuous monitoring of the operations of your clients to ensure that they do not run foul of the law. So quickly, I did quickly show you an analysis, a comparative analysis of two tax regime here, the Pre-Finance Act and the Finance Act regime. Okay, so we are going to do this analysis. I'll show you this analysis to show you that some of the revenue of the government this time around might not come from taxes. It might come from penalties for not paying, I mean, filing your taxes appropriate time, or not even paying the tax because you were, I mean, not even charging tax because you were carried away. by the fact that small entity are not required to charge VAT. Okay, except you're a micro entity, then of course a micro entity very small turnover, then your exposure is really low. But if you are not too sure whether today you will hit the mark of 25 billion or not, then you sometimes you might need to opt for voluntary compliance just to be on the safe side of the law. So, and you will see that in the pre-tax regime, there are some penalties we had. One of the penalty we had in the tax regime, because one, I'll show you this penalty. Then we'll now look at the filing, how you can file to ensure that you do not run foul of these penalties. Now, some of these penalties have not been talked much about. Some of these penalties will not, because if they talk much about it, it could be an issue. Of course, the government will tell us more that, oh, their benefits, their benefit, their benefit. Fine. How will the tax increase revenue generation to finance the budget? That means, in a way, there are some things that the government has put in that law to also increase the revenue of the government, because the FIRS chairman, Mr. Mohammed Nami, Alhaji Mohammed Nami must have been given additional, the targets will be higher this year. As soon as they agree with target, I know it will be shared. The targets in terms of revenue generation will be higher this year than last year. So definitely, they need to work harder this year. So, and you as a consultant, as a taxpayer, you need to also be able to ensure that you are not paying excess to the government. Okay, as consultants, our role is to be fair with the government and be fair with the taxpayer, to ensure that the taxpayer pay the correct amounts of tax, and of course the government as well. If you are consultant to the government as well, that the is the correct amount of tax that is being the demand notice is based on the uh, actual operation of the entity. So someone is asking about the slides. Okay, that will be during question and answer. So the first penalty is failure to register under the Pre-Finance Act. Now, initial penalty for the first month that you fail to register, you are going to pay 10,000 naira. Subsequently, you are going to pay 5,000 naira in the Pre-Finance Act. Okay, under Section 8 of the VAT as amended to date. So now under the Finance Act, you will see that the initial penalty has increased from 10,000 to 50,000 in the first month of when you fail to register. And again, the subsequent penalty is now 25,000 naira subsequently for each month. So you could see, comparing the initial, the penalty has increased by about 400%, and also subsequent penalty has also increased by 400%. Okay, so when you hit the 25 million benchmark and you fail to register because you are not preparing your monthly management account, you are exposed to this initial penalty of 50,000 naira in the first month and 25,000 naira subsequently. Now, under Section 28, now that talks about failure to notify the revenue on your change of address. Okay, so you will see the initial penalty that we have there was 5,000 naira initially if you did not notify the revenue. Subsequent months, the law requires that the company should be sealed up. Now, under the new act, the penalty is now 50,000 naira in the first month, and subsequent months you will pay 25,000 naira. This penalty has increased by over 900% based on the initial, and based on the subsequent issue, very large. Okay. Now, so under the next offense, which is failure to submit returns, in the first month you are going to pay 25,000 naira for the first month you fail to file your tax returns, and subsequently you are going to pay an amount of 5,000 naira. Then it therefore means that in the Finance Act, if you also go against this offense in the Finance Act, you do not file your tax your tax return, you did not file your tax return in the Finance Act, it therefore means there's an issue here that the initial penalty is no more the initial penalty is no more 25 thousand naira. Rather, it has increased from 25,000 naira to 50,000 naira. So that is the increment. So you could see before now subsequent penalty has now increased. Now, subsequently, you are paid 5,000 each month that you fail to file. But now, under the Finance Act, subsequent penalty, you are paying 25,000 naira subsequently. So you could see that there's about 400% increment in the penalty under the subsequent penalties and about 100% increments under initial penalty. And of course, most companies that finish the operation for 2020, maybe they do 2021 now, they will start approaching for tax clearance and the like, meaning they filing their tax return. This is another tax year. They need to be aware of these penalties and must ensure they put in controls and processes in place to ensure that they file their tax return timely. So, and again, we still have the penalty that we have, failure to remit VAT. If you do not remit VAT, you notice that you pay for the tax, you pay penalty of 10% and interest at the central bank monetary discount rate. Okay, so this one still remains apart from the additional penalty that we have. We also have other offences like failure to keep proper records. Now, under the VAT, is still 2,000 naira initial and subsequent. Although under the Companies Income Act, there is the law frowns more on not keeping record. Therefore, keeping proper accounting record is very important. Now, under the failure to collect VAT, if you do not charge VAT as a big business, you do not charge VAT, you are paying 150% of the amount not collected plus 5% above the central bank monetary policy rate. Then, if you do not failure to issue a tax invoice, you are going to pay 50% of the cost of the goods